Hey, this is Matt from InvestQuant. Today is Friday, March 13th, 2020. And yesterday the market saw more selling pressure coming in after the circuit breaker limit in the overnight session that triggered last night. We went on to sell off throughout the day and close at the lows of the session. That is being followed up by buying activity in the overnight session that has pushed us to the circuit breaker on the upside this morning. So wild times here, but I want to look at a bearish market pattern that is in play for today and share that with you. I'm going to set this up as ES, entering intraday open here, long 9:30 a.m. Eastern time. See trade type long there. I'm going to keep the stop target end of day, which means it is entering with a long at the open and exiting at the close of regular trading hours, which is 4:15 p.m. Eastern time. The opening filter I'm going to use is gapping up, and the pattern we're going to be looking at is a weak close in a bearish environment. So I'm going to define that by closing in the bottom quartile of the day's range, which happened yesterday. So if I scroll down here, in our last open and close section, we have close in the bottom 25% of daily range, hit equals there. That'll add it to our study. And then I want to put that in a bearish environment. So the way I'm going to do that is I'm just going to put it under a handful of moving averages. So I'm going to put it below the 10, below the 50, and below the 200-day moving average. I figure if you're below all of those, it's probably a pretty bearish environment. And hit view results. And these are the results of going long when gapping up after a weak close defined as closing in the bottom 25% of the day's range, when below the 10-day, below the 50-day, and below the 200-day moving average. So weak pattern here in a weak market. And one thing that really stands out to me with this is looking at the equity curve specifically around the last really strong bear market, the financial crisis here around 2008. This pattern played out very bullishly during that time. You can see the equity curve just really takes off. Of course, volatility is higher at that point in time, so that does help the equity curve to move higher when it's winning. But this pattern seemed to be pretty solid during that time period, and it's held up even during some of the more bullish environments after that, where below the 10, below the 50, and below the 200 wasn't as bearish as we're seeing today. But anyways, this is a pattern that is in play for today. And in fact, before I sign off here, let me go ahead and show it to you on the other instruments. I believe they all qualify for this today. And hit view results. And you can see the results all pretty similar. Win rate's hanging around 58%. And a big thing on these is the average win is a good amount larger than the average loss. So hope you found that interesting. Good luck, and we will see you next time.